Hello everyone. Today we'll learn about other concepts in accounting, basic concepts. Last time we had learned about transaction and capital and drawings. Now we'll learn about debtors and creditors and expenditure. So who are these debtors and creditors? Debtor is a person or a company that owes money to the business because they have purchased goods or services on credit. So a company or a person who has purchased goods on credit will be called as a debtor. That person owes money to the person from whom they have purchased goods or services. Okay, so if I go in a grocery store and I purchase groceries, and if I tell the shopkeeper that I don't have money, then that shopkeeper, uh, he has not received money, right? So he will be a creditor, okay, which we'll learn now. And I will be the debtor because I have not paid the money and I owe money to that shopkeeper. Okay, however, I have purchased goods from the shopkeeper, so I will be the debtor. And the person from whom I have purchased goods, I owe money to that person, so that person will be called as a creditor. A person or company to whom the business owes money for goods or services on credit is a creditor. So the shopkeeper will be a creditor. Example: business sales goods worth rupees 5,000 on credit. So the customer is the debtor. So I have a business. I have sold goods to a person A, for example. So that person A will be the debtor because that person A owes money to me. That person is liable to give money to me. Okay, he or she hasn't given me the money. Hasn't paid me the money. Okay, that person has purchased goods from me, but he will pay in the future. Business purchases goods worth rupees 3,000 on credit. Supplier becomes a creditor. So as I said, I went into a grocery store and that shopkeeper, I haven't paid the money to the shopkeeper. So the shopkeeper will be the creditor. Okay. Now we'll move on to another concept, that is expenditure. So what is expenditure? Expenditure refers to the amount of money spent by the business to acquire goods or services. So, whatever money I spend to purchase goods or services, whatever I want, I spend money on that, right? So, that money will be called as expenditures. So, there are three types of expenditures. First is capital expenditure, revenue expenditure, and deferred revenue expenditure. Capital expenditure, these are long term expenses, like we don't incur these expenses very often. Okay, revenue expenditure will be day to day expenses, and deferred revenue expenditure will be also day to day expenses, but the difference between these two is somewhat different. Okay, here in revenue expenditure, I receive the benefits immediately, and after receiving those benefits, that expenditure whatever I had spent, that finishes. Okay, uh, then deferred revenue expenditure, I incur money now, incur expenditure expenses now, but the benefits will last longer. Okay, capital expenditure, for example, I purchase a house, okay, or I purchase a factory or machinery or furniture, whatever. So I don't purchase this house building more often, right? We purchase a house, we build a house, and then we stay in that house for a long period. Like our ancestors also have lived in that house, like 200, 300 years also sometimes. So those are capital expenses. Okay, those are one-time expenses, and we incur benefits for a long time. Okay, we don't incur these expenses more often. Like every year, we don't incur this. Revenue expenses, we incur it every month or more often every year at least. Okay, for example, you can say we pay rent. Every month we have to pay rent. We pay salaries to the employees. Every month we have to pay that. Wages, for example, say in a factory, there are some workers working, so I have to pay them wages daily. So those are day to day expenses, daily expenses. Okay, these are revenue expenses, so I incur them in my day-to-day life, and the benefits uh, that is for temporary period. Okay, and deferred revenue expenses, these are also day-to-day, but the benefits last longer. So if I incur money on advertisement, so I have to sell some goods which I have produced in my company or my factory. I incur that money now, but my customers will remember my company, my goods for long time, and they will keep purchasing the goods for years and years. So those are deferred revenue expenses. Okay, so I hope you all have understood this concepts, and thanks for watching the video. Please like, share, and subscribe.